Hey guys, hello, welcome to another edition of the Crypto Lab with Alex. A new edition, daily updates. So we're gonna go over the short macro scene, and of course we're gonna switch to cryptos afterwards. As you probably know, the latest CPI has come out in between the previous and forecast. 8.2, but core CPI went to 6.6. So we're going to go over that. We're going to look what's going on with yields and dollar index, gold and silver, and then we're going to go over to cryptos. So any questions, comments, you can leave in a chat box, and let's start. Let me just add here total crypto market cap. I forget to do it. So let's go first a little bit into what's going on with this CPI. Let's review what's going on there. So we have core inflation rate year on year 6.6, one of the biggest rise in the, I don't know, 30, 40 years. Inflation rate year on year, forecast previous 8.1, previous 8.3, so 8.2, it came lower, but some of the components, less food and energy, came higher, increasing this core inflation. On the upside, I have tried to look on a very short note because it came 30 minutes ago. What's going on? So you can find this in the U.S. Bureau of Labor Statistics. You have all of the components here. So as you can see, September 2022, we have a biggest increase in I think transportation services, 1.9, and then you also have services, less energy, came at 0.8%, and you have also food away from home, 0.9, of course, aligned with these transportation services, because when you are ordering food, the transportation costs are going higher. We also have some negative numbers, but they're in a less minor effects. We have apparel came minus 0.3, used car and trucks minus 1.1. We have also gasoline, all types, minus 4.9. And we also have fuel oil minus 2.7. But energy services also went on the upside. So we have electricity 0.4, utility, gas service. We also have that increase, which is pretty large, 2.9%. And of course, commodity, less food and energy commodities stayed basically the same. As you can see, according to this list, there is a couple of things inside this core inflation which are moving this core inflation on the upside. And if we switch to the 10-year yields, let's first go over the what the market is seeing on the Fed meeting next. Of course, we have a rapid change in this outlook. So 2nd of November, 75 basis point is almost 97.0%. And then we have a new column in making, which is a full percentage point from Fed, currently 3% probability. So most likely we're going to see on 2nd of November, 97% now market is pricing a 75 basis point rate hike increase. And that will get us on a 14th of December meeting where target rate actually moved from 4.25 to 4.50. Now we have target rate 4.50 to 4.75. So this will also actually start pricing in a 75 basis point move in 14th of December. Of course, some of the predictions in February, which are going relatively far in time, are having some large numbers, as you can see here, but I will not look that for the current situation. I will focus on 14th of December in the next Crypto Labs or daily updates. So we're going to stick with what the market is going to start to price in, especially on the stock market, this new target rate, which actually increases for 25 basis points for the last week. So we are seeing inflation moving lower, very small, and core inflation is moving higher because of the inside components that are moving in the largest increments, as you can see here on this table. So 10-year yields are still continuing toward our fifth wave on the upside that we look for wave 3. So 1618 projection in that respect comes around 4.5, 4.6. So we have a little bit more upside in that. Then I think we're going to get a pause and a final fifth wave on the upside. So then we can count this full 5-wave sequence actually finished, and we can hope to a bigger pause in somewhat in 2023. So the sequence is still going on the upside. We need to see signs of a reversal. And I think we're going to have a little bit more upside here before we see a pullback and then a continuation higher. So how that reflects on dollar index, which actually functions as one of the mirrors of the interest rate differential. Of course, going higher, we are still levitating between my resistance levels between 112 and 114.50. I think we are having an ending diagonal here in making, a relatively large one. So I think this will make some time to actually unfold as well as in rates. So we are seeing dollar index going higher, 113.73 currently. We also have seen some of the problems, of course, into some of the pension funds in UK. Bank of England stepped in already twice in the market to calm down the gilts markets. So as I said last week, the first cracks are showing. We don't know the depth of these cracks. Maybe it's going to stay like this. Maybe it's going to widen more. We are going to see that in the next couple of weeks. But of course, the exchange markets, currency exchanges exploded. So we have a large volatility on several fronts in the 4 FX markets, which are actually showing what's going on between these rate hikes around the countries, especially in the G7 and G20 space, and in Asia as well. Dollar is still moving on higher levels. So we have to switch and also look what's going on with stocks. So stocks are tanking today due to this CPI. The triangle version, which I hoped we get, didn't occur. So actually triangle was describing a potential pause in this X wave here, and then a further consolidation a little bit lower. But since we are seeing now a full 5-wave swing move lower is actually happening, we cannot perceive this as a triangle. So we still don't have signs. This is a all-sized collapse in the stock market. For that, we will need to see some of the intermediary wave 3 developments there, which means a sharp acceleration after a small pullback. So let me just give you a small picture. How do we know actually that this large time frame uptrends has actually changed and moving into a larger downtrend? So when you have an Elliott Wave sequence on this magnitude, so if this is a wave 3 to the downside, it will be wave 3 of 3, which is sizably one of the biggest and sharpest sequences moving lower. So if you identify this as some type of a leading diagonal, we had discussion on that. Is this proper? Because some of the features here do not comply with the overall terms in the ending diagonal, because here there is a couple of mismatch between the portions of this leading diagonal, because the wave 3 is the longest of the wave 1 and it needs to be relatively shorter, and the fifth wave even shorter for a contracting type. here the wave 3 moved a little bit more. You can consider that an anomaly. Sometimes you will see these anomalies, but this is still for debates, and this can be debatable. But anyhow, in this case, just for the sake of explaining the overall sequence and how this is unfolds. So if you consider this blue wave 1 and this pullback in a blue wave 2, if you think that market will tank considerably lower, you're going to see wave 3, which is pretty vertical, sharp development, will actually unfold. So if we are in something like this, this sequence in a wave 3 will subdivide in a 5-wave sequence as well, which is going to be a very vertical one, and I'm going to draw that here to you just to show you how this will look. Let me make it with another color so you can see. So this is a wave 1 here, marked with the orange wave. You're going to see a small pullback and then very sharp acceleration going sizably lower below 3,000. So I'm still not in that camp. We need to see this really develops. I'm still in a corrective mode, trying to look this as some type of a ABC down in W, X. We are moving down in A, up in B, and down in C towards 3,000 levels, which I think it's a kind of a more objective event. Of course, nobody knows what the future will bring. I'm just trying to be a kind of a more on a side that this is just a corrective pullback if we look the overall higher time frames. But in any case, if you see a small pullback, because usually the pullbacks in the wave 2 of the wave 3 are very short in nature. So if you have a 5-wave sequence here, you're going to see a small pullback and then acceleration, very sharp acceleration to the downside, far below these 3,000 levels. Usually what we look for that is 1618 Fibonacci projection. So what we're going to do next, we are going to try to see where the 1618 lands as the approximation, because statistically in the last 50 years, a wave 3 target was mostly reaching 1618. There is a couple of ratios afterwards, but we are usually looking this one as a first target. So this comes around 2,751, which is considerably lower. So and even can go even further lower. So until we are still in a kind of a parallel channel range, without breaking this significantly lower below this channel line, I'm still not going to go for this relatively very dire move down in stocks. And of course, I align other assets classes as cryptos also in line with this. For now, our outlook is developing relatively nicely. We looked for a triangle and either a flat or a diagonal move lower. So I'm not going to go to this scenario yet. I'm going to stay still within the camp that this is a 5 waves down in A, going a little bit lower, maybe 100 points. Then we're going to go up in B and finally finish down in C, where there is a quality between this corrective pullback. So I still don't see conditions that we can actually count that this is a kind of a worse scenario happening. Market is just pricing in the new Fed target rate, and this pricing in might go a little bit lower before we see a pullback. So I just explained relatively what you gonna need to see if you want to see if you want to be very bearish on market. So this is still not the case. So I'm gonna stay still in this camp. That this is a complex correction before we start seeing some type of a hesitation and some small pullback in this B wave on the upside. So in alignment of that, we are going to look what's going on a total crypto market cap. So my triangle is still valid. So I'm still going to look for 1, 2, 3, 4, 5 move lower. So 38% for now is holding. We are testing it now. Also, a possibility of the ending diagonal always exists in a fourth wave. So you cannot know that in advance. For that, we need actually to see more of developments lower, because contracting ending diagonals are having 5-way move, but all of these components inside has a 3-way move. So this is a wave 1. This is a small pullback in a wave 2. So or this is a wave 1, wave 2, wave 3 will come to here, wave 4, and wave 5. Wave 1 needs to be overlapped with the wave 4 here. So we still don't have a clarity what's going on here. This is a very, very messy price action. So you can look at it from several perspectives. Also a flat, a 335 is also possible. So I don't like to be biased of any of these wave structures until I see a clear break of some of the rules. For example, the triangle is invalidated if we cross 765 billion in total market cap, which means that its price have to go more lower to invalidate the triangle possibility. So all of these 3 options are still open, what this wave 4 can do, and we still need to wait that we are out of this consolidation to see and have a better orientation. Otherwise, if you look from the closer perspective, this is just a very ugly price action happening already for a couple of months on a total crypto market cap and also on Bitcoin. So let me switch to cryptos and let's look what's going on our charts in the crypto space. Let's finish gold and silver. Yields moving up, gold moving down. That's a kind of a usual theme. We don't have any confirmation that the upside move has started. The move from lows was, in my opinion, in 3 waves. So possibly this is still not over. And the same situation is still in silver, because we didn't see any of the upside developments, continuation pattern, which means that you have some type of a reversal signature. So I'm still going to stay with this downtrend, looking for a little bit more lower levels. Overall theme here is that this is still in metals. We still don't see any reversal signature which can give us an actual trade for a potential reversal and a confirmation of 5 waves up, where the pullback can be some of the determining factor of the decision, because you can control the risk very efficiently. Here the risk control is pretty skewed, because if you're short here or you're shorting silver, some of the fib ratios are pretty sizably clustered below, so you have a little bit space to the downside. In my opinion, it's not worth of risk for me, because any reversal will cause a stop loss triggering if you want to be properly sized, and then on the other side, the downside may be limited. I mean, that's just my opinion. That's how I function. So this is not a trading setup that I will look either on silver or gold, either on the upside or on the downside in this moment. So let's switch to cryptos. Let's look Bitcoin and Ether chart. We looked them very extensively last time. We looked for a possibility of a triangle. Let's see if that triangle is invalidated on a Bitcoin and what's going on there. So Ether, let me start first with the Bitcoin. So Bitcoin chart, triangle is still not invalidated. We have to go below this 17,622. One of the also solution, as I said, in the total crypto market cap is some type of an ending diagonal. Triangle is still valid. In A, down in B, some type of up in C, but we are very close. Potentially, we're going to break this. We need to wait the rest of the day to pass if the stock market continues a little bit lower, and then we are left with a ending diagonal or a flat, a little bit more upside, and then finally reverse further to the downside. Wave count invalidation stays, let me just declare this, stays at a little bit below 13,000. I think this was misplaced. Let me just give you precise information on that. Wave count invalidation is below 14K. We are trading at 18K 335 now. Obviously the wave 4 resolution is still not done. We need to break this sizably on the downside to stay with the ending diagonal. If we see a hesitation and some type of an attempt moving back into this range, most likely it will be some type of a running flat and then a further move lower. I'm still observing this as a 5-wave sequence, which is going to, in my opinion, be finished between 15 and 16K without invalidating. But in any case, after a 5-wave sequence, you will see some type of reactionary move on the upside, either in a corrective manner or in this case, as I'm looking at as a development in the final sequence, which is going to be a 5th wave further to complete all of the sequence. As you are looking this chart, obviously we are coming in a very dangerous zone. Any wave count invalidation will put us in a serious situation for a Bitcoin, because as I would not like to anchor this wave 5 here and place this wave 4 here, because there is some big discrepancies how we look the time spent in a wave 2 and the structure of a wave 2 and a smaller wave 4. If this actually happens, the wave 5 here, and we break this wave 1, which will give us in a completely new universe for a Bitcoin, this will be a beginning sequence of a 5-wave move down, a pullback, and a continuation towards this previous support levels, which are sizably lower and come around between 3,200 to 5,000 levels. So this will be the next support zone if we actually face this dire scenario for a Bitcoin and in general crypto. So this will be a support area here, as you can see, and only in the case of the wave count invalidation, I'm going to switch to a more possibility or a more possible bearish scenario. So I'm still going to stick with this. I don't like to change my outlook until I see some of the rules are broken, and I learned that toward my career and burned myself many times before because I have changed the outlook too early without actual validation from the methodology. So as more you stick to methodology, not kind of implanting your own thoughts, changing the wave structure, maybe this is that. Some of the changes you can do, but overall higher time frame wave counts I don't like to change until I see some of the major breaks in the rules, which now changes and changes picture completely. So I'm going to stay with this for now. And on the Ether side, this will be looking like this. I think I have showed you the triangle last Thursday, or I show it to our members in the members webinar. So the best case scenario, this is a complex correction. We had a small triangle pause, and now we are in A, up in B, down in C, which kind of mimics the potential developments also in the S&P on the account of the, let's say, completing the WXY of a larger correction. The worst case scenario, of course, is again, we do have a full 5-wave swing lower, but note the difference. The wave count invalidation on Ether is much lower than a big Bitcoin in a percent change. We are invalidating this bullish potential wave count at 366. We are trading at 1,210. If we develop a 5-wave sequence here, it means that the Ether price will actually surpass these previous lows, and we're going to break actual last lows, which was, I think, posted in June and July. So we're going to continue moving down sharply in a wave 3, wave 4, wave 5. So you can apply the same thing as I said for the S&P. if this is really the wave 3 of 3, it's going to be a sharp drop even below these lows. Okay, so we're going to witness that very soon. How we can know that? We know that because if you see some hesitation here for a couple of days, then most likely this is going to be triangles. When you have a wave 3 of 3 developing, this is a 1 or 2 day affair and a very sharp move to the downside. So there is no hesitation here whatsoever. Usually market participants sells a hell lot of it and very fast. So that is how you can navigate where you are in the sequence. So this is going to be the sharpest of all of the sequence, almost a vertical move to the downside. So we are going to see, if we don't see that in the next couple of 48 hours or a little bit more, I will more likely to actually apply potential complex correction here in Ether. So from that perspective, if you have any questions regarding Ether and Bitcoin, so I'm available for your questions. So let me look a couple of, exactly 335, which means this is, I don't know, George, in which time frame do you think of the overall higher time frames? I have this as a 335. Actually places then the wave 4 here, wave 5 here. So this is overall extended flat. It is not always kind of a, I would say, comfortable when you are approaching the wave count invalidation levels. That's always raises suspicion. Usually when you have this type of flats, I would say in most cases they rarely challenges the wave count invalidation level. That's a very rare event. Also, one of the things is 50% retracement from this wave 2 on the upside. So if you look at, we are around these levels at 15K, 15,450. So I will agree with you if we see the confirmation and the reversal signature, but it's not always a comfortable situation to be in, where you want to stick with the uptrend and you see the invalidation levels relatively close. So that's always a warning sign for an analyst and a trader, especially if you use the Elliott Wave methodology, to open your eyes, as we say in Serbia, open 4 eyes. So you look that attentively, because this proximity of the invalidation levels should make you uncomfortable if you want to stick with the uptrend as I'm trying to. Okay, so I'm still gonna stick with it, as I said, but as I said, wave count invalidation on Ether, it's much lower than the Bitcoin one, which doesn't actually changes the situation on the Bitcoin. So for that respect, you can always observe the Bitcoin Ether cross, which still looks relatively bullish. In my opinion, wave count invalidation on Ether Bitcoin is far lower. We are trading at 0.066 and here it's at 0.04. Okay, so it's relatively far. So I don't think this uptrend in Ether. So the question is, will this uptrend in Ether Bitcoin chart will be because both of them are going lower and Ether is falling down as a slower rate as a Bitcoin, or we're going to see upside resuming and Ether will actually go higher more in a percentage wise than a Bitcoin. So yeah, I do look for that as a flat. Maybe you even think on a lower time frame. It is possible in the fourth wave that we are also in the lower time frame flat. We're going to see that very carefully. I don't mess around when I see this type of fourth wave corrections. They are designed to basically make you crazy, to take your money. So trading wise, this is the most boring market that you can see because the ranges are relatively small. It depends on the time frame you trade, but even if you go on a 15-minute charts, I mean, you're gonna see, let's say 1 hour just to see. I mean, this price action is relatively pretty awful for trading, because nobody can actually enter here, exit here, enter here, exit here. I mean that's almost impossible. I don't think there is anybody in the world who can actually make profits. Maybe there is, and kudos to him, but I cannot. So since I'm a larger time frame trader, I like to trade these higher term trend patterns. I do avoid this for that particular reason, because it's just massive price action. Okay, guys. So let me look your questions and comments. Genko, can you see QNT? Yes, we can see QNT. It's a very favorable chart. I have analyzed that for our members. Of course, if you want some crypto guidance, you can always visit Trading Analysis. We have an extensive crypto coverage, much more in depth than this one for our members. So as I said, I'm also looking, trying to master the Glassnode graphs. Potentially, I might include that very soon in our overall analysis. I don't find them particularly useful in many of their categories, but some of them are really useful when you do a couple of these things together. So I think I should tap into that, joining that into macro technicals, crypto technicals, and glass on-chain analysis. So when you have a triple kind of a strong strong rooted into this type of analysis, the probability of your analysis goes, I think, way higher when you are relatively close to a high degree of mastered of that analysis. So let's look. And also, I have to remind you the crypto course on using FIB. I'm going to give you probably in the next couple of Crypto Labs the dates. I have made a course on using the all sorts of FIB ratios and clustering into FIB markets. So you might be interested for that. You will see the. I have completed the course. We just need to design it to be properly for the public display. So I'm going to let you know on that in the next update. So let me show you this one, which I think has a very kind of a nice wave structure. I think I have it here on this feed. So let me just see that. Yeah, so as you can see, I think Quant has a relatively nice wave structure, which kind of suggests we are in some type of a wave 2 movement to the downside. So I'm going to isolate what's going on here. So from this 3-wave move down, we have a 5-wave move sequence, and then we have a smaller 5-wave move sequence, which kind of implies potentially after a pullback, we're going to start a larger degree sharp wave 3 on the upside. Of course, this always can turn into an X wave, somewhere around 3,320. But I think that even in that case, this will be something worth looking. In my opinion, this is a 1-to-1-2 sequence, which means that we are possibly going to start, as you can see on this RSI, a movement to the downside in a corrective pullback. You have a couple of zones which you can look here. I think it's too early for that, but I do see this chart very, currently in this moment, very bullish from my perspective, but this is in this moment, okay? So what you can do, you can put your case scenario, analyze, wait for a proper risk management entries, and then of course you can try your analysis or thesis and actually put some real money to work on If you're stopped out, you just repeat, rinse and repeat, and start to actually find what's going on there. So in my opinion, this is a very good chart because it behaves in a manner that I like to see when I want to see a bullish development. So I will just stop at that. Petar is saying on Serbian, Desi Munjo, tu sam Petre, kako si ti Munjo? Let me see, schnitzel chilies. Okay, let's see chilies and let's complete this crypto lab with that. So chilies is, I think, moving lower as we were looking. So also, what we are seeing here on chilies was relatively, I will not say simple, but relatively visible what's going on. So we have some type of a corrective pullback. So we looked chilies last couple of times. In a completed 5-wave move, we expected correction, and actually this correction occurs pretty sharply now. So I look for a ABC pullback, which means we're going to have some type of a 5-wave move lower, a little bit of a pullback on the upside, and then a C wave down. Okay, so wherever I see this type of things, it's relatively clear you're going to see some type of a reactionary setback on the other side. And this is exactly what is going on. So I think we were pretty very close in this analysis, what's going on in chilies, because we looked for a 5-wave completion in the last crypto labs and a reversal in the ABC pullback. So thank you guys very much on being on a crypto lab or a daily updates. I'm gonna try to roll on some and sneak in a couple of daily updates without the regular Thursday updates in the I think next week. So please like and subscribe if you want to be notified where these daily updates will come. So probably I'm going to do just one crypto, maybe a Bitcoin, and overall crypto space is kind of a, I will not say, I looked some of the titles, they say cryptos are dead. They are not dead. I mean, they're just following the overall liquidity crisis that we are seeing now in the world. And one way or the other, this liquidity crisis will be solved either by I don't know, it's early to say that Fed is going to pivot. Maybe when they're close to a little bit inflationary, one of their figures and targets, they're going to pause. I don't know, maybe they're going to stop QT. I didn't look at the last Fed charts, how the QT is progressing, which means that they're using quantitative tightening, which means they're tightening reserves, less liquidity, and all of that is kind of a roll-on effect. So if you want, once again, a kind of a solid crypto lead and a normal one, I think we might be a kind of a suitable type of a service for you. So if you want to check us out, visit tradinganalysis.com. There is a trial, I think $27. We also have a very, very good crypto Discord community from internal members who are excellent and patient and kind of observing this in a proper manner. So see you guys next week. Thank you for taking your time to be with me today, and click the like button for us, and see you next week, guys. Bye bye.